Right now, we are officially live on Facebook for the Tuesday edition of the Not Your Average Investor Show. I'm your host, Pablo Gonzalez. With me, as always, the man that I affectionately call GC because he's got genius concepts, knows how to generate cash flows. He's a great co-host, and because his name is Greg Cohen. Say hello, Greg.
Hello, everybody. Great to be with you.
And today, I am particularly excited about this because of the intersection of many worlds of content creation, media, technology, the fact that he kind of sounds like a mad scientist every time he talks, and everything he's saying is brilliant from every time I've talked to him. We've got the founder of Bullish Media, which is the new version of financial education, absolutely cutting edge. We got Brian Hanley with us, coming to us from Brooklyn. Say hello, Brian.
Hi, everybody.
Good to have you on board, man. I'm super, super pumped for this conversation. Community is already in the house. As we like to say, if you came to find out about rental properties, property management for rental property investors, or get an edge on the Jacksonville market, you're in the right place. Today, we're going to be talking about media and tech and a bunch of interesting stuff. But if you want personalized advice, go to chatwithjwb.com, hop on a call with one of our experts, and they will treat you great. And now it is time to welcome our community. We got someone that's called a roll call. You ready for it, Brian?
Let's do it.
Roll call time. All right. Anthony did a hello, everybody. Bill Shields, buenas tardes, amigos. Buenas tardes, Bill Shields. John Hannon, good afternoon. Carl Thompson, good morning. NYAI peeps, good to have you, Carl. Drew Barnhill from Georgia, good afternoon, all. Lee Bishop, the MVP of the Not Your Average Investor Show community, says good afternoon, gentlemen. Joanna, our community manager's in the house. If you need anything, she says, welcome to our guest, Brian Hanley. If you need anything from Joanna in the chat, just ask her. She'll direct you the right way. Chris Gonzaga from the luscious Hudson Valley, upstate New York. I think that's around your area, Brian. He says, great day, everybody. Denny Davis, it's a beautiful day in the JWB neighborhood. Good to have you, Denny. Karen is in the house. She says, I'm here with the patriarch and the matriarch of the first family. Karen Moline, we got news for you, Karen. We got a nickname for you. So Brian, the Molines are a family that tunes into the show together. We call them the first family of the Not Your Average Investor Show. We call Ken the patriarch. We call Carolyn the matriarch. Karen hasn't had a nickname until now. Karen, you're officially the Duchess of the Not Your Average Investor Show. Welcome to the show, Duchess. Madison is in the house. She says, happy Tuesday, everybody. We got Nadeem Shah. He's back. Good morning. Good afternoon, everybody. Ken Moline is checking in from Los Altos, the patriarch of the Not Your Average Investor Show family. Noah Randari is back. Hello, everyone. Bob Wiesner, who is
past guest.
Yeah, past guest who was with us on Thursday. I got really insecure whether I said Wiesner right. It was Wiesner.
Yeah.
All right, cool.
Yeah,
all right, Bob.
You got it.
Bob, good to have you back, buddy. Good to have you in the house. Who else we got? Man, we got a full. Brian's checking in. He's a pro. He's got his beautiful raccoon Bullish logo in there. Anybody else? Hervé Francois from New Jersey in the house. Good to have you, Hervé. All right, we got Jen Filson, fairy godmother of the Not Your Average Investor Show community. And let's kick this. Marilyn Cotterman from Homosassa, Florida.
Home of the manatees.
That's where you swim with manatees, Brian, in case you didn't know. In case you ever want to meet a manatee up close and personal. And Jen Filson, the fairy godmother of the Not Your Average Investor Show community, fresh off of hosting a meetup at the Molines house in Los Altos, California. We heard it was magical. We saw it in the Facebook group. Can't wait to hear all about it in the chat today. But right now we're talking to the star of the show, Brian Hanley, founder of Bullish. Brian, I'd love to start this conversation with kind of what is Bullish and what is the opportunity that you saw in the market to launch this like radically different delivery of financial education and media. If you could just kind of talk us through that a little bit.
Yeah, for sure. And thank you very much for having me. I'm really excited to be here. I know, Paulo, we've had conversations over the last couple of weeks about just like, the state of, what you guys are doing and what we're up to. And I'm really excited to be here. And thank you to the community as well. I'm excited to learn more about you guys as well and see how we can all learn from each other today. So excited to be here. Yeah, so I guess answer your question, Bullish is 2 years old. Before Bullish, I was over at Vice Media, Vice.com, Vice on HBO. And essentially while I was there for 5 years, myself and a few other folks that are on kind of the founding team with me here at Bullish, worked across a variety of different departments there. I was in sales and there was, folks in content journalism, editorial, TV, you name it. And, throughout the time there, you really understand a lot about, what people care about on the internet by looking at how well traffic does on videos and articles and things of that nature. You can also start to really understand audiences, especially when you're dealing with an audience size of 70 million big, especially around the world. You learn a lot about people and behaviors and consumer behaviors, which ultimately help influence, everything from how people spend their money, how they invest it, where it goes. And one area that we noticed there was this huge kind of interesting opportunity was as millennials were getting older, there's this huge need for financial education and information. You're at this point where, a lot of millennials now are getting into their early 30s and mid 30s. And, they need that they're starting to save and they have money to invest, and they ultimately want to, they want to figure out how to put that money to work in the most effective way that will help them make their money work for them. So, but there was no real media outlet helping with that. You had CNBC, you've got like a lot of these other kind of, traditional financial media networks. There's been some examples online popped up that, you could look at as examples of addressing this, but there was still no real breakthrough that's helping with this. And ultimately, that's what when we looked to start Bullish, we kind of squarely decided to focus on this one category of business investing, finance, crypto. Like, this is our niche. I think at advice, there was a lot of different coverage everywhere, and ultimately I grew this passion for this particular category. I have a long history in investing. I bought my first stock, which was the Google IPO, and that helped me. My dad gave me a couple bucks in his IRA that ultimately bought me my first car. So I've always had a knack for the markets, and I really wanted to kind of push this idea and this itch forward. So ultimately, Bullish, when we went to start Bullish, the whole kind of conversation was, it's like, how can you go and actually, be a media company in 2020 without having like a big audience? And I think what we noticed the opportunity is that the engagement with people and entities online was shifting from, the institutions to the creator. And we saw this advice when we had Jesus Amaro, which we helped bring from a podcast into a video TV show. And then ultimately Showtime came along and picked it up 3 years later. The real value was Jesus Amaro was the talent through that company. And ultimately we wanted to partner with people who we felt were going to basically break through. And that's where our kind of focus on creators came in. So, Bullish has relationships with a lot of the major creators in the financial, business, money, crypto space across Twitter, Facebook, Instagram, TikTok, Twitter, I said that, email newsletters, and a variety of other social media platforms. And we basically help work with those creators to become a full-time creator and make this their living, and do so in a way that's sustainable for them and gives them the comfort that they can to actually do this full-time. And then on the other side, we're providing a service to brands and folks that are looking to reach investors by helping them just navigate this. There's a lot of different creators. They all have their own interesting personalities and unique traits that we need to be mindful of. And just due to the nature of that, we offer this as a service and an expertise to then be able to kind of bring in consulting as part of that and ultimately deliver results. And a lot of our largest clients are financial technology investing platforms that are looking to reach new investors. And ultimately that's how we make our money. So we sell advertising to these, the folks looking to reach our audience and ultimately help monetize these creators' audiences and hard work. So I hope that's a little bit of background on myself and what we do.
Yeah, definitely, man. And to me, what's fascinating, where I love, where I think this conversation is going to go, is kind of what you said about Vice, right? When you sit at this intersection of people wanting to learn, people creating the content, and the advertisers that want to, get in front of them, you get access to a lot of information, right? Like you're a giant, and I can tell your brain is fast enough to be like this, like giant data aggregator. And I would love to just kind of lob it up to you of how is, from your vantage point, I would love to ask you how investing is changing from how are people learning about it and what are the actions? And we're talking, I guess, Gen Z and millennials, right? Like we're talking about the younger digital native generations. How are they learning about investment and what are the actions that they are, more prone to, and how are they doing it that's different from before?
Yeah, that's a great question. And let me ask you a quick question. Do either of you have kids?
I do.
He does. I don't.
9-year-old and a 7-year-old.
Do like whenever you give them like money, do you give them cash? Did you give them cash often, or do you just like they have bank accounts?
Well, they have bank accounts. Yeah. I don't give them much money. They got to earn it. They got to sell stuff if they want to get stuff.
But like when you hand like a $20 bill, are you like wiring that to their account for them to use, or are you going to give them that actual dollar bill, like the $20?
Right now, I still give them like the dollars.
Got it. All right. So that like it's just really interesting though to think about how, when I was growing up, that's all like we really used a lot of that. And granted, like credit cards have been around for a while, but like the whole concept of just like exchanging cash and knowing what the value of that is and seeing it and feeling it is ultimately going away. It's now just turning into a number on the screen. And I think there was a really interesting thought piece done by one of the folks that's kind of in our orbit, Packy McCormick, who wrote about the whole online game. How basically like money is just turning into a game. It's another app on your phone. So I think, we need to, acknowledge the fact that like, this is ultimately becoming something where, there's just a changing relationship with money that's happening. And I think, generationally speaking, when you look at, where millennials are coming from, it's 08. But ultimately they're, a lot of them are employed making money and doing well, and they ultimately want to just like put their beliefs to work. And when I think when they go and they look for like answers, you're typically met with a couple of different kind of paths. And I was on one of these paths, which was, hey, I know somebody who seems successful. Can you introduce me to your financial advisor? And you go and have a meeting with them and they pitch you the 60-40 portfolio, which you're like, wait a second, what if I like the fact that like electric vehicles are probably going to take over a little bit faster than everybody else thinks? No, we don't do that type of service. You have to go to an active stockbroker for that. Wait, what? We can't just like place a little bit more of an aggressive bet there? It doesn't really fit in their box of services. So, I'm kind of just like, why am I going to give my money to this guy? Like, I don't really care about the fees or whatever. Just like, this is not going to be a fit. I want somebody that's going to be really engaged in helping me, understand how to put my money to work. And then what you're left with is like, a lot of internet answers, a lot of Quoras, a lot of like, searching Reddit for answers. And ultimately, I think what you saw from, over the last 2 years in particular, with just like the rise of, WallStreetBets and a lot of the online communities, like that wasn't new. Like we had, there were penny stock pump and dumps in, during AIM era. Like this isn't anything new. So it just, reinvigorated, a much wider audience to wanting to get involved and ultimately take control of their investments. So I think you're seeing investing change in the sense that what used to be like, let's vote with your, let's go to vote, and which like people are obviously expressing their beliefs that way, but more importantly and more tactically, you can vote with your dollar. And I think people are realizing that more and more. And it comes down to like understanding where your 401k is parked and like, what are you like, where is your money actually being invested in? So I think you're seeing a whole generation want to take control of this, but there's no real like resources online. I mean, you have like Bloomberg and CNBC doing a lot of really good journalism in the space and like keeping that up, but then also they're not asking a lot of the right questions. They're not, super in tune with what's going on, online as much. Some of them are, but a lot of them aren't. So I don't know. I think you're seeing a lot of different, evolutions in the way that people look at their money, and ultimately they just want to take control of it and put it to work themselves. People are smart and they want to put it to work. So let's give them the tools and outlets that they need to express themselves, and hopefully do so in a very safe and responsible way, where, it could be done, but you can also speculate. Like, speculation is the new entertainment, as one of my advisors says, which is so true. It's like, just let's go and have fun on Robinhood. I want to like put my like short-term idea to bet against this thing. Let that happen. This is America, right? So yeah, that's how I see it changing.
Yeah. And for me, I can draw a lot of parallels because my investing journey started by reading a book called Rich Dad, Poor Dad. And the main theme about reading that book was mind your own business. And mind your own business does not mean you have to go out and start your own business, but it means understanding what you're doing for your active income and also understanding what you're doing outside of your job so that you can achieve financial goals and maybe financial independence, right? And so a big part of that is just understanding what your money is doing, having that transparency and control. And like you mentioned, most people put money in a 401k. They have no idea where that money is actually going. They have 10 choices to choose from. They feel like that's their idea of minding their own business, but it can be, and it should be a lot more than that. Brian, I was listening to you speak a few times, and I've heard you mention this, a number of times now, and it shocked me. But I think that you mentioned that maybe like 3 to 5% of all 401ks is invested in Philip Morris. Is that right? And then people don't even know that.
Yeah, Yeah. This is something that we've done just some very anecdotal research and back of the envelope math on, which we're definitely planning on going much deeper on this. But if you think about the amount of 401ks that are out there, just like for all the private sector that has the ability to contribute to it, and obviously we want more and more people to have access to them. But in reality, you're kind of left with like a fund provider that has like 10 target date funds, 6 target date funds that kind of all the employees choose from. And they're basically selling this as a package to as many employers that'll buy it and as cheap as the price they can get it, but also just like de-risking themselves beyond belief, because all they want to do is just like beat the market performance. Like that's it. And then, where things get more complicated are when you deal with like unions, like teachers unions, or like out in California with CalPERS, there's huge like boards of people that have to approve investment decisions. Basically, it just invests all this money into the S&P 500 index fund, essentially. However, when you really unpack the S&P 500 index fund, it doesn't take like that, that bold of a person or an idea to really start to just make some very slight adjustments, because you're just getting into like the methodology of why that exists. But yeah, there's basically, if you look at like the markup of the S&P 500, which is supposed to make up, a version of what the American economy looks like, which is just not at all the case, but that's kind of how it's made up to be. Oil, gas, and tobacco still make up a pretty significant chunk. And Altria and Philip Morris are both publicly traded companies that are the recipients of a lot of that downstream investment. I think there's probably somewhere between like, I don't know, $1 and $2 trillion that are marked up, between those two companies that like, I think are kind of spread out, that kind of passively come in and around it. But it's a crazy amount of money that is come through.
And, and I had no idea about that, and whether or not you want to invest in those companies, it's your prerogative. But for me, my grandmother died of lung cancer, right? Yeah. The fact that I would be contributing to that company just purely for myself, my own personal, is eye-opening, because I never knew that. I never knew what you just shared there. And that transparency, that control has been lacking. For me, I was blessed to read this book and kind of go down this path, but for most Americans, they haven't. But now there's this explosion of information, education, technology, the platform, the forums to do it. And you're just seeing, especially younger generations they're just leaning in there. Right. And that's kind of why we have this opportunity today.
Yeah. And I love the take on gamification of it that you just kind of mentioned, right? Like you're talking about how once you get that distance from the cashish in your hands, right? Like, and you just see it as data on a screen. This is our generation and younger grew up playing Madden and, playing whatever other video game and GoldenEye and whatever that has trained us to look at this stuff in a certain way. And I think about, you talk about the S&P 500 at this big aggregation. And I think on the completely other end of the scale is what happened at WallStreetBets, which you just mentioned. What does the average person misunderstand about that? What happened at WallStreetBets, and what do you see from your perspective of like the big lesson to learn?
And if you would, can you kind of explain what happened first of all? Sure. Because a lot of our community may not really be in tune with what that was and why that was momentous.
Yeah, for sure. Just to clarify that last number, it was a couple $100 million invested in those companies passively, not a couple trillion. That was a mistake. But anyway, yes. So WallStreetBets. So basically, everybody's familiar with Reddit. Reddit has been an online kind of community forum discussion board that's been around for quite a while. Kind of one of the original Web 2.0 companies that kind of hit the scene. And it's always been like a sleeping giant. It's always had in a couple 100 million users kind of area. And, just a source of like really interesting internet content, whether it's about learning things or talking to people about other similar beliefs. When you really like boil down to like what the top like subreddits are. So like as we're going into Corona, there was a subreddit that had about 100,000 people in it called WallStreetBets. And essentially they branded themselves as if a Bloomberg terminal had access to 4chan, which was like the online kind of message board where a lot of like wild shit on the internet would spread. And it was basically like branded as a ton of degenerates that are just basically like gambling in the stock market, but doing so in a very public way, which makes it also like entertainment. And when you're reading through these forums and you see a lot of these ideas that these guys are proposing, it's like, hey guys, like I one of the stories that I remember that was posted that blew up was like, I got caught for plagiarizing in college, and out of spite, I invested every single dollar that I made into Chegg over the last like 15 or 20 years or whatever it was. And Chegg just just so happened to go on an epic run over the last like however long since their IPO. And this guy turned like 20 grand into like 350 grand or something. And basically like bought his way into retirement on it. And everybody's just piling in and being like, yo, I'm going to join you on this journey and just buy some Chegg stock. And it turns into this whole like epic, like, why are you buying Chegg stock? Well, I read this online, we got to believe in it. We're going to believe in the company because fuck that thing. And it gives people a reason to like invest in something, but their ideas were the wackiest and there was no reason and there was vile language being used and it was like a whole weird corner of the internet. So what happened was I think they were this silent, they were this kind of, community that was buzzing along for a while. But also kind of what I mentioned earlier about just like the generational shift and people caring more about money. Thinking about where you're going to invest your money is something that's on the topic of people's minds, but they didn't really have an outlet to share it. And all these kind of kids on the internet found their way to express themselves. So, what happened was Corona hit, everybody started getting stimulus checks. The market crashed. There's this saying, if anybody's like familiar with, some of the more intricate parts of the stock market, there's a thing called the VIX, which measures like how volatile the stock market is. And they say a rising VIX drives clicks, which is like, just like the second that the market goes down, everybody is just looking for answers, whether or not those answers are right, as long as there's like a unique take or something to share, whether it's funny, entertaining, meaningful, whatever, people just want to read it because they just want comfort. So, to be in the media business during that or be a social media creator, it was like, gasoline on the fire. And everybody had a Robinhood account and everything was just so easy. So, you're able to take this money, pop it into Robinhood, go into an online forum and have some fun. And we had an intern at Bullish who his first investment was Dogecoin. He put like 20 bucks on a Robinhood account. He 4X'd it, sold it, and then went and put the rest into like Ethereum. And I'm just like, that is his first experience with an investment in his life. And like thinking about that, he will go down as being the kid, like he just 3X's and now it was 20 bucks to 60 bucks. But like now he's got this idea that he can win. And obviously everybody will eventually get brought down and like, at some point, right, hopefully. But ultimately, like then you read these stories in the press about, you got, some investor that does that with $20 billion. And you're like, what? No, things are not too different from each other here. So I think, being able to go and like be the, talk about this, I think you start to see where, this is something that just blew up. And I think it became, popular in culture. People needed things to do. So anyway, WallStreetBets went from basically 100,000 community members to about, I think they sit around like 9 or 10 million right now. And they took over, they basically proved that a bunch of retail investors can come together to affect change in the stock market. And I think the battleground was GameStop. GameStop was obviously a huge component of the story where ultimately trading got, limited by Robinhood. And it just goes to show that like, don't underestimate the crowd, when they get involved. It is like all of your financial models get blown out of it. From this moment, I've actually been getting involved a bit in the cannabis industry. There's been a stock sundial that literally was memed back into existence that not a lot of people remember. Like AMC was memed basically into like, pop culture. Like these are like hugely impactful moments that are happening now. And I think it's really fascinating to watch how it's all unfolded. So yeah, I hope that gives a little bit of perspective on it. I know there's like a ton more to the story. We're actually going to be doing a documentary about it. There's a ton of them coming out. So it's like it was a fun time. It was our Super Bowl.
When you say memed into existence, you're essentially saying somebody made a joke about something and it drove market values. That's kind of what you're saying.
Yeah, exactly. I mean, like, for example, somebody would go on WallStreetBets and say something to the effect, or just like on Twitter and be like, hey, I'm going to go joke around with Wendy's. Let me go try to like make like the, go make this whole like thesis on like why Americans should eat more chicken nuggets and just go post it as a shit post. It's making it up on WallStreetBets. And if there's some form of like funny entertainment around it, somebody will screenshot it, post it on a couple other social media platforms. Next thing you know, everybody's running around town being like, yo, did you hear about Wendy's? We should get in on stock. Am I going to get in the stock? I don't know. You're going to get it on the stock, and like, it's, you see it go around town. That's what happened with Dogecoin, crypto. Like it goes around town, so like knowing where those kind of like those entry points are important. You know, it was funny. I was just, I sold my house. I went through a construction project on it. And the guys that were helping me with my tile was telling me about some email newsletter he subscribes to and how he's like bullish on lithium. I'm like, why the fuck are you bullish on lithium? What are you reading? And he's like, dude, it's what they're going to use in all the EVs. Like I'm reading up. I got the research email. I'm like, I love it. Like somebody that's taking control of their like investments in a way. And it's like, it works, you know, I don't know. So it's always fun to see people's stories and experiences in the market.
Yeah, with the GameStop thing, it seems like you had all the vital elements of doing something that was going to move that was going to move some sort of amount here, because you had a lot of folks that had a community built up, right? They had a common goal, and they also had a villain, which is the man, right? Is Wall Street, right? And the more that they continued to get the price up for GameStop, the more pressure they were putting on Wall Street, both in the form of like, hey, we can control things, we can move this mountain, we can actually affect change here. And then it also cost a lot of big Wall Street firms a lot of money that were expecting GameStop to go down. And you know, and then they did the same thing with AMC. And so it's like, this is a formidable force, right?
Don't forget nostalgia as part of the equation.
There you go.
Right. Like the idea that
all us Madden lovers.
Yeah, Madden. And
something about how big the collectibles market has been on a roar, and a lot of that is nostalgic driven. Like, I mean, Logan Paul alone is responsible for that half of that entire asset class's valuation, and then it just gets passed on to Gary Vee. Like, it just, if you think about the social influence that folks like that have now because of their audience sizes, it really is like, an investment is just understanding that opportunity that like, whoa, those guys are getting in early on and I got to get in some way. So it's like, how do you, but what's your unique play to that opportunity that you're seeing? Because it's not always like a stock. It could be like a private investment. It could be a house on the corner, right? Like, what are you seeing that they're not? But you know that the market's going to go up. You know, the market's big enough for everybody. That's how they work. So.
You bring up Gary Vee, and it reminds me of, like, I recently heard, I think it was Logan Paul talking about how Gary Vee just kind of texted a bunch of Mr. Beast and all these people with like YouTube channels and was like, yeah, buy CryptoPunks. So they all bought CryptoPunks. And, you know, this idea that now that we live in this world where regular people have these huge audiences, and, you know, some regular people even have just big audiences, not huge audiences. And if you can get one to, you know, a couple of people can affect this like massive shift in valuation of something, right, is kind of terrifying, right? Like what we were speaking about today on our run was just this idea that the stock market has forever changed because of these dynamics, because of this freedom of information and people to adopt audiences. What do you make of that, Brian? Like what does the modern portfolio hold these days? Are people going to go to hard assets as a result? Or do you think that this is just like one giant Pandora's box that will be forever opened and now everybody's gambling all the time?
Yeah, it's a good question. I mean, I think it definitely matters who you are and like what stage of your life you're in. I think the biggest shocker to me was learning that there is a whole group of new young investors coming into the market, and crypto or in NFT is actually their first investment. Whereas like mine was the Google purchase that I mentioned, right? So really thinking about like, what is the entry point for the next 10, 20 million new investors that are going to come into the markets, whether it's them being young and like getting, the ability to do that, or if they're older and get the ability to do that whenever you have your chance to get involved. I think you're seeing trends like that play out, which you're like, whoa, okay, the game has changed. So I think, a modern portfolio for, a lot of folks that are, millennials that are engaged in the market. I mean, we're seeing people that own, half stocks, half crypto, bonds are just non-existent. And their version of, like a safe asset is just like an index fund. And they're just used to, there's memes around people that are creating these other like, random little like ETFs, like the inverse Jim Cramer ETF, where, it basically just takes all of Jim Cramer's picks and then, does a tracker to see how well they do. And it's proven that he underperforms the S&P. So if you inverse it and then allow people to go and invest on those ideas, you're effectively beating the stock market. So like for that, it's like, why not go and give that a couple bucks? Because looking at the historical data, like whatever, fuck it, like I'll do it. So, you're seeing these interesting plays, but like that's diversification there. You're definitely seeing NFTs enter, portfolios. Real estate is a really interesting one. And I think it's one that I know we want to talk more specifically about. Real estate is not exactly the most accessible form of, asset class. There's a lot of financial technology companies that are working very hard to make the asset class more liquid. Obviously, we all heard about the Zillow news earlier this year, or late last year about, their algos buying homes and stuff. But I think you're seeing it in a lot of other interesting ways with like Fundrise and other kind of, companies that are trying to make more of like a, an ETF around real estate, kind of the future of what a REIT could be. So, the democratization of access is definitely coming down, and you're seeing this in a lot of different ways, which is exciting, being able to click a button and invest in something. So you're seeing this permeate through a variety of different asset classes and industries and use cases, but yeah, it's exciting to be in the center of it.
Yeah, I'd love to spend a little time there because we get a lot of questions from the audience, from our group, which is mainly focused on real estate as the asset class we tend to talk about the most here. And they're always asking about different ways to invest. And the proliferation of ways to invest online for small dollar amounts is certainly noteworthy. So could you shed a little bit of light on what strategies investors are using today to invest online in this crowdfunding type of way of putting their dollars to work in an asset class like real estate?
So the types. So I guess what I'll dig into is not any and I'll share where I'm personally invested in things that I'm like I've heard of or met with people, because there's a ton of different opportunities across the board. So we help represent the brands that are looking to reach some of these folks that I'll mention, and then so there's like conflicts, in like where that lies. But I would say, just generally speaking, you have REITs, which is a very popular way of investing in real estate. If you only have $10, $100, $1,000, it's very liquid. You can move it in and out, and there's some tax efficiencies to owning those. And obviously just owning, raw real estate is obviously like the most, that a lot of people go after because of the real big tax incentives there, but also there's work involved in that, all those other things where, oh, I want to get in on it with a buddy or a syndicate. You kind of think about like, do you want to be passive or active in this? And then like to what degree do you want to like diversify yourself throughout that? If you even want to go down any of those lanes. Some people don't want to do any like deal to deal investing. They just want somebody to do that thinking for them, and they're willing to pay a small price on that, which is where like the fund fees come in. I think there's an overemphasis a lot on like low fee index fund was like a really big campaign for a while, but I think like, hedge funds haven't budged on their terms, and I think that they shouldn't, because if you're providing alpha to people, like let them deliver it and let them do their job, and if they're going to do that in an expensive way, let them do that. So I think there's like that dynamic to it, but yeah, I mean, I think people on the most passive side, you're seeing the REITs, you're seeing folks like Fundrise, which basically creates a, I forget exactly what it's called, but it's some type of like active ETF where they basically go after a bunch of different types of real estate projects in a specific category. So they go after like, putting debt to work for, multifamily, like, whatever, like a big, like complexes over 100 units or something, and they'll go and focus on putting a ton of money to work all across the country in that particular like idea, and then they know that that's going to return X amount, and they blend that together with something that's more equity focused, and then they might do, so there, I know like downstream there are Fundrise buyers out there, or like not buyers but investors that are trying to put money to work in different projects. So to the degree that they can interact with syndicates, I'm not the most familiar with that, but that's a way that that's kind of what Fundrise does. There's other folks doing stuff like what we actually just had a conversation with a company called Farm Together. Their whole pitch is specifically for accredited investors going after U.S. farmland as an investment opportunity. I mean, U.S. farmland is beautiful, and I guess it's, for whatever reason, was inaccessible in a variety of different ways. So I think seeing like an asset, like seeing like an opportunity like that pop up. So, there's that. And then we actually just helped this company called Lex, which is trying to go after basically allowing skyscrapers and other like types of like big commercial key real estate to be kind of more actively traded as an IPO essentially. So I'm still learning a little bit more about exactly how they work, but my understanding is that each kind of asset would trade under a ticker that's publicly traded to some degree, and then that gives you access to like a liquid market that is part of like a New York real estate play. To the degree that those, like how big those markets get, I'm still learning more about that, but I think you're seeing markets pop up everywhere. And generally it's just like wherever there could be like a liquidity put into something, it's happening. There's another company doing with the Constitution. It's like, it's happening everywhere. So.
Yeah, I agree. It is happening everywhere, and there's more opportunities today than there were even 5 years ago, 6 years ago, 8 years ago. There was a change from a legal level that allowed this to happen. You guys can look it up, that whatever act that was that allowed this type of online crowdfunding to happen, and it is just spread like wildfire. When folks ask me when should they invest in some sort of online crowdfunding, there are a lot of advantages to it, right? There's the instant diversification across markets, across providers, right? Across asset classes, right? You can get that instant diversification. You can do it for much lower dollar amounts, right? So for like a JWB property, your minimum investment is going to be about $50,000. Well, you can do this for much lower dollar amounts. And so there's a lot of pros there, cons there, right? Typically, you don't have as much control or really any control when you are actually going to dispose of some of these assets. So you want to make sure that you take a look at that. And then a lot of these are just for accredited investors. So you want to take a look at that as well. But just wanted to share some personal experience with this, right? JWB started to look into these crowdfunding platforms as a way to raise money. I don't remember exactly what year we started. It might have been 5 years, 6 years, 8 years ago, somewhere around there. And so we became a sponsor for one of these crowdfunding platforms. And we actually made the news by raising over $1 million, $1.5 million in 24 hours. And for us, we looked at it as an alternative to raise private lending dollars, which we did. Madison, if you wouldn't mind, go ahead and post that article there in the chat there. We were just looking at this before the show. And this is another way that an investor out there could become kind of a private lender on real estate development projects. So you can own the asset, you can be a private lender, and then real estate development companies like JWB use these platforms either to sell assets or to raise money to do future projects. And it's this entire ecosystem that just wasn't here 10 years ago.
That's interesting. Brian, you were just talking about you bought a house recently, or you've invested in real estate as well. What are you investing in these days, man? Are you looking into these platforms? Are you kind of going harder at crypto? What's kind of your outlook right now?
Yeah, look, it's diversified across a lot of different stuff. I think pretty macro about things to the degree that I can, recognizing that I'm going to put pretty serious money to work in like New York real estate as, in buying an apartment here. And that obviously comes with, but it's also an asset that hopefully grows. So, that's like a component of my portfolio. I've got a, fair bit in crypto stocks. I'm always down to like throw a couple bucks into something. I think that, between when I was leaving Vice and starting Bullish, I spent some time learning how to trade options in the stock market, which was a fucking rabbit hole. And I don't necessarily recommend it, but I do if you want to really understand how to understand how to define risk at a very tactical level when it comes to money and putting money to work. And it really makes you think how much money is okay to put to work and to what level of risk that you want to take on that money or that belief. So that was a really exciting time for me. And I think from that moment, I really respect, live with this idea that anytime somebody comes to me with an opportunity that I can throw at least a couple $100 at, it's happening. It's a couple $100, especially if it's something silly like a Dogecoin or something like a stock idea. I understand what me taking a big risk on something is and having conviction versus this is a fucking joke, but also like putting some money to work because you can't underestimate like movements and ideas. But you bake in the fact that there's going to be a bunch of failures, but you're going to hopefully 10x. And that's the beauty about like some of these markets where you can actually get some exposure into these big upside moments. So I always dabble in a lot of these other platforms. I have some money with Fundrise. I've got money in like some random REITs for whatever reason. For some reason, I was like really hot on Cold, COLD, which was an ETF, or it still is. And they specialize in like refrigerated, like commercial spaces. And for whatever reason, like refrigerated food was like increasing. And I was just such one of these rabbit holes that went down. And I think the REIT was crushing it for a while, but you're like, that's silly. I'll invest in that, and like just put some money into it. So like, there's those kind of ideas that I'd always like love to listen to. Cannabis is a big one too, with like the IIPRs of the world that are doing like real estate for cannabis grow operations and being able to kind of take on their leases as a way to like invest in the cannabis market without investing in the plant for whatever weird rule that people have of getting exposure to that. That's an interesting market. So there's like all these takes that people have, and you're like, how can I put some money to work? So I'm always down to like throw some money at an idea if you guys have some. But obviously then the more, the bigger allocations are much more like real estate as like my apartment, stocks, like my 401k, which I don't even touch. Like I have those places that like help keep me safe long-term, but I'm also not blind to the fact that I'm levered up in my business right now. That is actually the biggest like exposure that I have to anything. So that's where I spend most of my time. But that's like, building stock and equity in myself, and something that, the team, that we work with all can share in building our own stock and value up, which is what happens every day where, everybody gets stock options as part of working together and so on and so forth. So yeah, it's the ownership economy. That's what it's all about.
It's interesting, man. Like the idea of like a couple bucks here and a couple bucks there seems so normal, but it's a new thing. Like that's something that happened not that long ago. And this experience that you keep referring to of the first thing you invest in, your first experience kind of defines how you see it, is very real to me, right? Like I like to gamble, right? Like I remember my first time I ever played craps at a casino in a cruise ship. I made a bunch of money and now I love craps, right? So there's this like whole generation of people coming through that are seeing this, maybe I can put $100 and I'm like 100 million, who knows, right? Like, and seeing that as like a normalized experience is a total trip.
And have it accessible on your phone at any point when any random idea that a friend of yours says and then shows you like 3 articles of other people saying it, it's to give you that ability to do something about it at that moment. It's just, we've never had that opportunity in our lifetime.
It's crazy, man.
Yep.
Brian, can we get into a couple of crowd questions for you real quick?
Sure.
So Chris Gonzaga asks, I don't know what this is. Brian, do you use Edgar database to check on insider buying of any stocks you invest in? Is that something that's on your radar?
Yeah, actually, if you're going down that rabbit hole that it sounds like you're about to go down, I would just skip ahead and go to Twitter and start following some of these politician tracker accounts that are popping up. Basically, I think there's a rule for any member of public office, mainly in Congress, where you have to disclose your stock trades. And, there's whether it's a senator or an insider that owns above like 5%, I think, of the total stock, you have to reveal what insiders are either buying or what outsiders are buying up to a certain amount. But for the longest time, like people don't really report on a lot of that stuff, but it really got kicked up from a political standpoint. Everybody tracking Nancy Pelosi's stock picks because they were doing so good and they were public. So you could like kind of follow along with her. So there's like this whole play there. But then for the insiders, as people get to some of the smaller companies, and you can really keep an eye on like, what is management doing? Are they buying up their stock, or are they selling it beyond what they're already being allocated? And it's a way to do some research to see like how much is the like management team really think that their stock is undervalued from their own personal holdings, or it's them like saying, hey, look, we're overvalued and this is insane, we're gonna like start to dump some stock. So it is this thing you got to keep an eye on. I look at I don't have time to go through SEC filings, but there is like whalewisdom.com is another thing where you can see who owns what stocks. Like what institutions own them. So, but yeah, that's a good question. There's a lot of funny interest in.
I'm reading between the lines. Edgar database is like a tracking of like what congressional people are investing in. Is that what that is?
Edgar database is the database I believe that the SEC has to have to, all the different disclosures for companies. If you're a publicly traded company, you have to file SEC filings on your insiders buying or selling the company's stock, whether it's for compensation purposes or because they're doing it because they want to buy some of the stock. They have to file that with Edgar. Edgar is a database that then holds all of that. And that's, I believe it's an SEC thing. So there's people that like build trackers on top of that to then start to like scrape that data and then build models off the back of it.
It's insane.
Wow.
Wow. The amount of like.
That's alpha though. That's how you got to beat them to the forefront of it. Who's at the front lines of that data, right? Because if you can get access to that data and you can see it before they can, that's alpha. And there's people just arbitraging that all day. There was a fund recently. One of the most popular ETFs is called ARK, ARKK, which is like a very tech-focused ETF. It's run by a woman named Cathie Wood. She's a very like big, like bullish crypto, bullish the future, Elon Musk fan, all of the above, but very exposed to like high growth companies that don't necessarily make that much money. And there was an ETF that launched a couple of months ago called the Short Cathie Wood ARK. It's at Short ARK, SARK. There's $200 million in that fund in a couple of months that's just sitting there that is willing to short that the idea of the future. And it's just like, it's basically a meme, but it's also like there's bots there's like algos that trade that because they want to see, what she's doing and how to short it away. But
there is so much here that I don't understand or would never think of. Honestly, this is just making me really love passive real estate investing as well, because I think all this stuff is great. There's a time and a place for this, but I also need to balance that with like, okay, set it and forget it. Like I know what's going to be happening. I can't think about who's shorting this person or what insider is doing this, man. That is just, that creates stress.
I don't have that either, dude. And when I think that more people need to understand that, I think it's like going back to like where I spend my time and where I'm investing in myself, which is my business. And that's where I spend most of my time. I check my brokerage account very infrequently. And it's like, I've set it up to be generally buy and hold, and I'll do a couple plays here and there. Like Peloton, I had a nice little bounce play on that. I was like, that's silly. And then obviously the news that came out, like, nice, got it.
Yeah, right.
But that's just like here and there just to stay engaged, but it's not worth it. What are you going to try to do? Sit around and try to turn 100 grand into 200 grand. And that if you're actually going to do that, you're not going to keep up with that. And you're going to have some major drawdowns. You're going to blow up your account. And then you're going to want to like, it just comes back to making more money. It's like cut your expenses, keep that under control, like in your, personally, but like, go and make more money and find things to own that are going to have a 5-10 year payoff. Because that's where the real wealth is getting created right now. It's being able to go and place some like small but calculated multi-year bets that you think you can pay off. And that's ultimately what real estate is. You want that like long-term, cash flowing asset. And then you build up a whole empire of it. And that's sitting on a beach.
Mic drop right there. Well done, Brian.
I'll take a real estate portfolio all day. If you gave me a real estate portfolio that was cash flowing, like pretty sizable, and be like, but you can never own crypto or trade it, you're done. Great. Take it. Like I'm rational. I'm here to financial.
Curious, what is you see all this stuff and you see these things going down and you have a good concept of risk. What to you is an acceptable return where you're just like, it's not worth messing around at the roulette table and this is a really, really good return?
I mean, look, I think you got to look at it all on like a risk reward ratio, right? Like there's always going to be the high risk, high reward, and then the low risk, low reward. I think like when you think about like also the amount of access that I personally need to capital at any given time and the amount of liquidity that I need, I'm buying a home in Williamsburg. I got to get some money prepared in a somewhat tax efficient way. I think everybody should have a financial advisor that's fee-based to help advise them on some of these kind of decisions for the long run and just build a plan, because taxes are fucking a big deal, right? And I think not a lot of people understand the gravity of that, especially when you're putting money to work and you're investing it and you're like doing it in various different asset classes. Like the reason that people do this is for the tax efficiency. Like, and that can really double your investment over 10 years if you really do that right. So I think that there's that degree that I would say like I'm very cognizant of that. But look, I've got money, like I would say that some of the more tactical stuff that I've done recently is that I'm totally done with putting any money in a savings account at a bank. I'm now like basically putting that money into Gemini US dollar or one of the different staking, like, but stable coin kind of things. I've spread it out across a few different ones because obviously, God forbid, there's something wrong, but that gets 8% yield a year, which is like pretty safe. For the most part, safe. It's secured. There's a whole FDIC insurance kind of branding thing that needs to get worked through with a lot of before you start to see more mass adoption against that. And then, I think look, I'll go we've placed a seed. We made an investment off the Bullish balance sheet in a SaaS company that was basically helping all of our creators that have email newsletters. Basically, the guys that were behind the Morning Brew email newsletter referral system, which was really like the crack that made that entire email newsletter get to like 3 million email subscribers. They're building and then like packaging and kind of sassing that out. So we put a seed investment in that company. That's a total YOLO bet. But hey, if that pays off, it could be huge. I mean, you even saw like Amazon came out and Rivian, their investment in the EV company was like a $20 billion. Like, what the hell? That there's somebody at Amazon still taking these bets, So like, thinking if you have that kind of capital, making those like little lotto ticket bets, but also recognizing seed stage investing is like an actual like total YOLO. And I think not enough, people need to know that, and that it's like a really dangerous thing. But it's also something where, teach their own. I mean, we can go to Vegas and gamble away our entire paycheck. We should be able to invest our entire paycheck away in shitty investments, but do your own research and stay diversified.
Interesting that you said 8%, man. Like I was kind of trying to put into context what you think is a safe investment that's worth investing in. And like, I look at the property valuation sheets we look at every week, which just within the property are an 8% return. And then like, if you include property appreciation for a long cycle, it's like 24% with leverage, right? Like that was kind of the number I was looking for to see it's,
leverage. What can you guys elaborate on what you mean by that leverage?
Yeah, exactly. In real estate, we have access to the best potential financing terms, right? Banks have been lending on investment properties for decades, and the mortgage-backed securities market is really strong. So we're able to actually take on debt at, call it 4% interest rates. And when we do that, and you're in an appreciating market where values actually go up, you've only got, let's say, 25% of your own money into it. So your return on investment from a market that goes up, let's say 4% a year, is actually a 16% return just from that appreciation.
Okay.
Yeah. So you can combine that with the other profit centers and you can get.
That's fascinating. I would have never thought about that, but that makes so much sense. I always thought like America, like we as a country have just like love real estate and have just totally made it into a financial instrument. And like, we want everybody to have it. So just like treat it as a financial instrument, and just thinking about like the amount of leverage that people have in the real estate market and just like how accepted it is so widely, but it is impossible for the crypto markets to be able to get some leverage right now. Like, people are dying, and like the US is like actively like stopped a lot of these markets from offering like, 100-to-1 leverage on it. But it's also Robinhood's crack. Like, that's what they're trying to sell.
Yeah,
it's
right.
like, but I also think like the thing that I think about a lot, it's like you hear this thing, and it was preached to me growing up, is like, don't get credit card debt. Okay, that was one that I was able to get through. Okay, fine. Go buy real estate. Okay, that's the sound steady thing. Own where you live, whatever is tax efficient. Go, and then invest in the stock market. And then like, the stock market does 8% a year. But then I was always like, why not just lever it up when you're younger into like try to get 16% a year and take the bigger drawdown? Because if you are going to hit a drawdown like that, the best thing you can be is be a net buyer of stocks, and you're just putting money in the market. And you want the market to go down between age, 20, between basically, you want the market to be kind of low until, you're thinking about like, retiring, because then you're buying it cheap.
Right.
So like, put the money to work and go find a way to get more money, put it to work. So I don't know. I see that, and you're like, where's the leverage there? I think that everybody shuns it because, oh, it's dangerous. But it's like, but is it, when you're thinking about an asset class that's got these numbers behind it? So I love that. That's cool.
I mean, Brian, the journey you just took us on right there is one that I think is missed by the vast majority of Americans, right? We demonize debt, but when you have debt,
demonize debt. That's a great meme. Whoever runs a social media account, don't demonize debt. That's a fucking.
Love that. let's put a coin on that and let's start to run this thing up.
Oh, man. I like that.
But that's
funny, when you feel like, and it's funny too, because you look at like even people like Apple, right? There's like, how much money do they have in cash? And then how much money do they have in debt? And you're like, wait, how does that work? Like they don't need to pay that money back. They're just chilling. Like, it's like, it's worth it to just like have the leverage if you need it. Like, okay, I don't know. It's such a, when you got to humanize it though. I think that the challenge has been going back to the more macro discussion we were having about like Wall Street changing investments. It's like nobody sits down with, your self-made millionaires that, they're left with a financial advisor or a wealth manager that has a playbook. And I think like now, like people want to express their creativity, and investing and like running a fund is also like a sexy form of entrepreneurship. Like there's a lot of people starting funds. There's a lot of money putting people to work. Like, we're living in an era where innovation is getting funded. So like put your hand up if you need something, right? It's hard to hire right now across a lot of different categories. Like, there's communities building like micro SaaS products with one person. Like I'm hearing some of these different things that pop up that solve such a simple little problem. Tons of real estate development, like, helping like agents get more appointments through marketing. Like there's a gold rush for, helping make software solutions to make this stuff easier. And raising money is a perfect example of one where we're just scratching the surface of how quickly you can be able to raise money, and how you raise money from people, and it's how you market investment opportunities. So it's really exciting to be kind of in the middle of a lot of this stuff.
Agreed.
Yeah, man. And I think we have another longer form. Maybe you guys have a conversation online of like, how do you get that message of, that this is in front of like the newly minted millionaires of just like, hey man, take some off the table, put it into like a 24% return. That's super, super safe.
Yeah.
And I think that's probably the follow-up conversation. But for right now, Brian, man, listen, I want to be respectful of your time. I know that you guys over at Bullish have a really cool brand. You got some cool swag. I think you got a little promotion for us. Anything you want to share with us here? He's kidding. If you're listening on the podcast, he just got up from the chair and went to get something right now.
You gonna take the shirt off his back or what?
We're giving away some stickers to the next few subscribers. If you go and I'll type it in the chat right now. We've got an email newsletter called Bullish Rippers, which is kind of our take on all things stocks, cryptos that are ripping and dipping. And our whole idea is to have an email newsletter with a little bit of a nice Twitter account and Instagram account that makes memes, talks about markets, big trends. No stock picks or anything like that. Simply kind of what things are moving, and hopefully inspire you and learn a little bit about the market. So it comes out a couple times a week. It's completely free. So give it a subscription. The next couple of people that subscribe will hit you up with an email and give you a code for some of these some free stickers. You hopefully slap them around your town and spread the word out about what we're doing here. But thank you guys very much for having me on. Really appreciate that.
Love it. And I'm subscribed to it. I've been learning a ton off of it, man. So I think it's a really, really, it's different, man. Right? Like you guys are just aggregating a bunch of stuff, and you're going live on Twitter and doing these like things, and it's a different way of learning that I'm training my brain to, and I get a lot of value out of it, and I love the brand. So I also put in there the Bullish shop. You guys got some cool stuff. I know you got some like golf polos for sale and stuff like that you're moving some inventory. So
love that.
Share. Yeah, old golfer over here. He loves it, man.
Paulo's gonna buy me one. It's his gift because he loves when I go and play golf so much.
Too soon.
All the subscribers will get you guys a little discount code. So everybody that subscribes in the next few minutes, we'll make sure you guys get a chance to win a sticker pack and maybe a little discount on some clothing from us to get ready for the spring. So some golf apparel for all of you golfers with
love that.
Or Twitter creators. So anyway, guys, it was great being here. Thank you very much. And to the community, thank you for having me. And hopefully you guys learned a little bit, and happy to continue the conversation. You can reach out to me at Brian@BullishStudio.com, and I'm happy to chat further about anything. What's not?
Sounds good, man. And if you got a jam, go ahead and jam. I'm gonna say about the community here, but really appreciate you spending time with us, man. Really mind-opening conversation.
Yeah, awesome, man. Really great to know you, and great to have you on the show.
Yeah, cool, man. And
Bye-bye.
and our community members that stuck with us for an hour plus today, you know, we never take it for granted that you spent an hour of your day in the middle of a Tuesday hanging out with us. It just means the world to us. It's why we show up every week. It's our favorite thing. And this Thursday, little foreshadowing, GC is going golfing again. That's
I mean, I was really excited until I have to announce it on the show. Then I feel a little bad.
he's golf clubbing, but we're doing something different, right? We have a guest investor coming on Thursday. And our guest investor asked, why don't we have the construction crew here? So we can talk a little bit more about construction. So what we're doing is we're having why don't you tell them, GC?
So Jim Marshall, our director of construction here at JWB, is going to be joining the show. And like we mentioned, we have been getting a lot of really great ideas from all of you. So thank you all for sending those ideas either through the chat or just sending us an email. We get every single one of those. And then Paulo and I go to work and we're like, how can we solve that? How can we get the right person on the show? How can we make sure we tackle that topic? So a lot of the questions lately have been about renovations and the JWB standard for renovation so that we limit ongoing maintenance and vacancy costs for you. So we thought there wouldn't be a better person to have than Jim. Jim is going to, of course, talk through the JWB standard and a whole lot more about the theory behind how to renovate a house and why we do what we do and why we don't do what we don't do. So hopefully this will be something that you guys will get a ton of value on. And so I'm not going to be there, unfortunately, but you guys are in incredible, great hands with Jim and with Willem. Willem's our guest investor.
Guest investor, Willem. So hope we see you there. Until then, if you want to talk rental properties, you want to talk about property management, you want to talk about Jacksonville market, the place to get some expert advice is chatwithjwb.com. That was not an average conversation about investing GC, which is why we bring it to you as not your average investors. See you next week.
Thanks, everybody.